Hello everyone, this is Dan Gramza and welcome to dangramza.com Market Studies for Monday, March 24th. Monday and Tuesday of next week I'll be in Lima, Peru to teach a course for a corporate, which I'm really looking forward to. But in the meantime, let's take a look at what happened with these indices. The S&P traded just a couple ticks below that sell level, and then it bounced right back up. You know, as we talked about in the foundation course, all trades, we have trade entry, trade exit, and always risk management. And depending on someone's risk tolerance, that would determine whether or not they'd still be in that trade. And what we're looking for, and if you're not familiar with these charts, you're looking at a daily chart. And the concept is what's referred to as a swing trade. And the green line represents buy, the red line represents sell. A dashed line means that it happened earlier in the week. But here's a market in the S&P that did break lower and bounced up. And I know I get a lot of people ask me, don't you get upset when that happens? It took you out of, a positive trade. Well, no. You can always get back in a market. And that means that this was a level that I thought was significant, and so did the market, but just a little bit beyond what I was looking at. Now, the dollar difference between the buy and sell level in that market, just to give you a reference, is $3,450 a contract. What do we look for? This is a neutral zone trade, but it does imply buyers are here. Let's see if they can follow through next week. When we see the action in the NASDAQ market, very similar to what you just saw in the S&P, also a neutral zone trade with a bullish bias. The dollar difference from the buy level to that sell level is $3,140 a contract. If we take a look at what's going on in the Dow, very similar also. Traded just a bit below that sell level. The dollar difference in that market, $2,725 a contract. In the Russell, the small to mid caps, this one also traded below its sell level and popped right back up, so it's underwater on the close. Dollar difference between the buy and sell level is $1,800 a contract. If we look at what's going on in the euro, the buy to sell level there, again just to give you a reference, is $5,312.50. The bias here is to continue lower. However, we're at levels that buyers have come in before. This is a good candidate for an equal and opposite. Let's see about the Swissy. Dollar difference there in that market, $1,550 a contract. Again, this implies profit taking. Be very careful on the short side. Japanese yen, it's struggling, trying to figure out what to do. A part of the action that you're seeing here is a result of the carry trade being unwrapped. But right now I'm looking for a sideways move on Monday. The Aussie dollar continuing lower. However, this is also potentially profit taking. Look for the possibility of a bounce. The difference between the buy and sell level is for the Aussie dollar is $420 a contract. Well, let's talk about the British pound. It wants to go higher as well. I'm looking for an update on Monday. And in the Canadian dollar, a dollar difference between the buy and sell level in that market, to give you that reference, is $1,000 a contract. And again, I think it's at a spot where we may get some follow through to the upside. In Bitcoin, dollar difference between the sell and buy level in that market is $4,650 a contract. And again, the bias is for a move to the upside. You know, if you look at the 10-year notes, the dollar difference buy to sell level $500 $5 a contract. So they are selling the rallies, and that means yields are going up. So if that continues, look for a down day on Monday. We see the same thing in the Treasury bonds, 30-year Treasury bonds. Dollar difference buy to sell level is $437.50. By the way, that's the same between this buy and dash line and the line that you see here, and the break to the downside, almost the same size of move. Gold trades below its sell level. Dollar value in that market is $11,805 a contract. Further movement to the downside, yes, but look for a bouncy move. Same thing holds true in silver. A dollar difference here in that market is $7,100 a contract. We got a possibility of a market slowing down though. So again, be cautious on the short side. Copper traded just a bit below its sell level. The dollar difference in that market is $2,250 a contract. They're buying to break. It wants to go higher. I'm not so sure there's the fundamental support for that market as we talked about in the advanced video. Like crude oil, well, on this market, trying to rally. I don't see strong fundamentals for that market to the upside. Look for an inside day. And I feel the same way about nat gas. I'm not looking for a dramatic move to the downside. Again, it implies we've gotten balanced, and that's one of the ways a market will change directions. Dollar difference sell to buy level, $2,000 a contract. Soybeans is a market that I think is going to be going sideways on Monday. I don't see the fundamentals to really drive that market. Corn in the same boat. I look for a sideways move, and the same thing holds true for wheat, a market that's slowing down a tad bit. Well, those are my thoughts for today. Thank you for joining me. Look forward to being with you again tomorrow. In the meantime, take care.